crypto, the future of money, the revolution against banks, and the get-rich-quick scheme your cousin keeps DMing you about while still working the closing shift at Applebee's. If crypto were a Tinder date, it would be the guy who calls himself an entrepreneur, but really is just selling solar door to door. So yeah, if you can't tell already, I hate crypto. And by the end of this video, I'm confident I can convince you that the entire cryptocurrency industry is the single biggest scam of our generation. Let's start at the beginning. The origins of cryptocurrencies can be traced back to 1983, when David Chaum introduced the idea of eCash, an anonymous electronic money system. And then for the next 20 years, crypto lurked in the shadows like a charity fundraiser waiting outside Whole Foods. Then 2009 came. That was when Satoshi Nakamoto mined the first Bitcoin, and the nerds rejoiced. Suddenly, a decentralized, government-free, bank-hating digital utopia was born. It was a promise to be the currency for the people. Decentralized, free from government, and a salvation from the greedy banks. It was the digital middle finger to the traditional financial system. At least that was the promise. Because if you fast forward to the present, the reality of the crypto industry looks very different than what people wished for.
This isn't real money. It's printed by the Montana militia.
It'll be real soon enough.
Let's start with the North Star crypto, Bitcoin. It's been 16 years since Bitcoin launched, and it still has no real-world, widespread utility. Sure, you can technically buy stuff with Bitcoin, like a luxury watch or pay a freelancer in a country your bank doesn't trust. But for everyday life, you still can't buy groceries, pay rent, or grab a coffee with Bitcoin. There's an estimated 350 million businesses worldwide, and of those businesses, around 18,000 of them accept Bitcoin as a currency. That's almost nothing, basically zero. And of the companies that actually do accept Bitcoin, well, they usually just have a payment processor that instantly converts it to dollars immediately after the transaction goes through. As a currency, it's useless in the grand scheme of things. And the reason for this is the high volatility, high transaction fees, and large amount of fraud. So yeah, Bitcoin can technically work as a currency, but that's kind of like saying, technically you could mow your lawn with nail clippers. The truth is there's no widespread adoption and no real-world utility for it as a payment system. The real use of Bitcoin isn't a decentralized digital currency. It's a speculative asset whose price is entirely driven by supply and demand in the market, similar to gold. Except the difference is, humans have assigned value to gold for thousands of years, while Bitcoin isn't even old enough to legally drink. Instead of revolutionizing the way we access, control, and transfer our money, cryptocurrencies have just become another medium for speculation. So if it's just a speculative asset, then surely it's at least a good investment, right? Wrong. Bitcoin's annual volatility sits at around 60%. For context, the US stock market averages about 15. That means crypto is roughly 4 times more volatile than stocks. And that's why actual money managers, the ones who manage trillions of dollars and are legally required to not make dumb decisions, only recommend putting 1 to 2% of your net worth into crypto. Why? Because the risk-adjusted returns are garbage. In fact, Warren Buffett called Bitcoin rat poison squared. Jamie Dimon, CEO of JP Morgan Chase, said, "Bitcoin does nothing. I call it the pet rock." And Peter Schiff summed it up best. At the end of the day, when you peel the onion and get to what's really there, there's nothing there. And maybe there's a reason that institutional investors, who love money more than their own children, treat investing in crypto like a gamble. And it's because it is. And yes, I know Bitcoin climbed from cents to tens of thousands, but that moment has sailed. And for every Bitcoin, there are 10,000 worthless meme coins. And if you think you're the genius who can choose the next crypto coin winner, congratulations. You're delusional and you're basically at a roulette table, just with more Discord servers.
Casino gambling!
And I can show you the evidence. CoinGecko, a crypto data platform, has tracked more than 7 million coin listings since 2021, and in a recent report, they announced that 3.7 million of those coins have stopped trading and are now considered dead. That means over half of all the cryptocurrencies they tracked haven't just lost value, but they've gone to zero. And it's not like when a stock fails. When a stock fails, you might at least get a claim on assets. When a crypto project fails, you get a JPEG logo of a meme coin, a Discord message that says, "We're pivoting," and radio silence. It's the only asset class where you've got a coin flip's chance of your money entirely disappearing overnight, and not because of some massive unforeseen market meltdown, but instead because you got rug pulled. So how did the crypto industry address this? Well, they invented stable coins. Stable coins are cryptocurrencies designed to stay tied to something stable, like the US dollar. Think of them like the crypto version of a savings account. And that's where Terra and Luna come in. They were marketed as a revolutionary algorithmic stablecoin, whatever that means. Anyways, here's how it worked. Terra, the stablecoin, was tied to the dollar, and Luna, the sister token, was designed to help stabilize Terra's price. When Terra fell below $1, the system would mint more Luna to bring it back up. When Terra rose above $1, it would burn Luna to bring it down. Clever in theory, disastrous in practice. Because in May 2022, Terra lost its tie to the dollar during mass sell-offs, and the entire system imploded, and the stablecoin that was once seen as safe and reliable collapsed, wiping out $45 billion of investor money in just 1 week. Regulators called it one of the largest wealth destructions in modern history. Okay, so if 52% of cryptocurrencies go to zero and stablecoins can blow up at any moment, surely the exchanges that crypto is traded on are safe, right? Wrong. And that's where FTX comes in. FTX wasn't just another crypto exchange. It was the exchange. It was essentially the New York Stock Exchange's equivalent for the crypto industry. They had Super Bowl ads, celebrity endorsements, stadiums named after them, and investors like BlackRock and Sequoia dumping in billions. Oh, and also some crazy rumors surrounding their C-suite. And the beautiful face behind it all was CEO Sam Bankman-Fried. He was the face of trust in crypto. The entire industry called him crypto's white knight. Fortune magazine labeled him the next Warren Buffett. And Sequoia Capital, one of the most successful venture capital firms of all time, wrote a now-deleted article titled, "We're All In on Sam." So surely FTX had to be safe, right? Wrong. Don't you remember? Nothing is trustworthy in crypto. It turns out FTX was stealing customer deposits and funneling them into its sister hedge fund, Alameda Research. And long story short, this is very illegal and they got caught. It was so bad that FTX's own internal accounting had no idea where all the money went. In bankruptcy court, John Ray, the same guy who cleaned up Enron, said, "Never in my career have I seen such a complete failure of corporate controls. What FTX did would be like if I raised money from my friends and family to start a business, but in reality I'm taking that money, loading up the DraftKings app, and laying down the nastiest parlay known to man." Meme coins, Terra, and FTX, well, they're just the tip of the iceberg. The crypto industry is a graveyard of hype, scams, and bankrupt dreams. And after everything that's happened, the bankruptcies, the rug pulls, and the countless individuals who have lost everything, crypto is still here and thriving. And when you strip back the onion, all you find is greed in a new costume. And that's exactly what is driving the cryptocurrency industry today. Even with no real-world utility, no intrinsic value, and no trust, it's a flourishing industry. It's the same hype cycles, the same pump and dumps, and the same insiders getting rich while retail investors continue to get absolutely obliterated. And the ironic truth? Whenever something collapses, the community's reaction is always the same. How could this happen in an unregulated, anonymous industry built entirely on trust? And sure, maybe blockchain technology itself is transformative, but the current real-world applications of blockchain tech and cryptocurrencies is one giant casino. So yeah, I hate crypto. And it's not because I don't understand it, but because I do. It's the same lies, same greed, and same blind optimism over and over. It's not the future of finance. It's a digital mirage that disappears the second you reach for it.